Well, it's been a rough couple of days in the market as we're recording this. We had some interesting data come out. Things aren't too optimistic currently, but what does that mean for rates? Well, we've got an update on that coming up with Bill Linton right now. Well, hello and welcome into the Smart Mortgage Show. Glad to have you. We do cover a wide range of mortgage lending topics and plenty of questions that you might have as well. But as always, every month, Bill, we've got a market update. And this one's maybe one of the more interesting ones because we've actually had a little bit of choppiness, a little volatility in the market. And as of the day we're recording this, things are down quite a bit. And I think the news is just kind of overall a little bit pessimistic.
Yeah. And to your point, Ben, so if you're looking at your 401k balance or your stock account balance and things aren't looking as rosy, a lot of times there's a counterbalance to that in the bond market. So mortgage bonds are actually doing better. Rates have come down a bit, Wednesday, Thursday, Friday of this week. And the reason for that is, well, the Fed met Tuesday and Wednesday, and in the press conference afterwards, Powell signaled that they felt like the inflationary issues that were driving up interest rates, they're starting to see some real progress. They're not exactly where they want to be, but the progress that they've seen indicates that we're going to get to where we need to be. And the other factor, really big factor, is because the Fed mandates, they have two mandates. One is keep inflation running at 2% over the longer term. And anybody watching this, you know why that is now, because you felt the pain of high inflation, right? We feel it. So they're really dedicated and they put all of their energy into two mandates: inflation, 2% over the longer term, and maximizing employment. So keeping the unemployment rate at a certain level. They've expressed that level at 4.2%. Okay. Now, the reading that just came in this morning came in at 4.3%, and the forecast was 4.1. So now unemployment rate is higher than what's expected. And we feel like there's a high degree of certainty the Fed's going to act to decrease rates at the September meeting.
Yeah, I think that was the biggest takeaway, is the job market looking weaker. And as you mentioned, if you're checking your 401k balance, your retirement accounts, the news isn't so cheery, right? I think it's one of the bigger drops in a number of months we've seen today. So let's turn around and try to find a little bit of the silver lining here, Bill, because I know this could mean rates come down. So kind of what's on your radar right now in terms of where mortgage rates are? Do you think, I know we've talked about rates continuing to kind of creep back down, but do you think this maybe makes it happen a little bit faster?
Well, so I think that there's been a lot of predictions and a lot of forecasts. And I think that a lot of those predictions and forecasts didn't have the data behind it to support the decrease. And based on the tone of Chairman Powell and the Fed, it sounds like the data is now in line with what they feel would be needed for a rate decrease. So we feel like a 25 basis point decrease, okay, which means enough of a decrease that we'll see it in the market in September. We feel like that's highly probable, and believe it or not, the markets try and bake that in early. So we're going to see that, rates have come down a bit because they're expecting the decrease in September. So we're already feeling that. But there's a possibility that they might decrease rates by 50 basis points. Now, that depends on what they see. There's some inflation readings that we're going to see before that meeting. That's going to play a big part in, do they decrease 25 basis points or 50 basis points in September?
Yeah, I just scrolling through Twitter, X, whatever you want to call it. And I was just seeing that because of this kind of recent news, a lot of the prediction markets are saying that there's a greater than 50%, even I've seen up to 70% chance, and we'll see that 50 basis point cut in September, which I think earlier this week is around like 10 or 11%. So it's jumped significantly just in prediction markets. Not that that means a whole lot, but it does kind of signify that, hey, maybe that you're right. This might happen a little bit sooner, maybe next month.
Yeah, and I think if we look back over history, Chairman Powell has had a pretty steady trigger finger on these rates, which means, I'll bet you that there are some Fed chairs that may have raised rates or decreased rates more quickly, and they're really waiting for this inflation to cool. Now, it's all about timing, because if you wait too long, we could go into a recession, which is possible, but we don't want to land ourselves in a significant or a deep recession. If we do, it would be a soft recession with a quick rebound. So they're trying to time the market so that they can keep everything in line and not put us into a bad spot.
Yeah, I've seen the word recession thrown around a little bit more now than I have in a while, maybe even dating back to a year ago. I think it was being used a lot around that time as well, the fear of a recession. Are we in a recession or not? I think we're kind of having a similar discussion right now on the heels of this news. When and if we into a recession, what does that mean typically for mortgage lending? What are some of the typical trends you see when we are dealing with that?
So typically when we're in a recession and the economy is slowed down, interest rates come down to stimulate the economy. What we've seen recently is the economy running too hot, and we raise rates to cool an overheated economy. So it's kind of like if you're running a business, okay, and you wanted to do some expansion, but the interest rate on the expansion's 20%. Well, that might, when you plug that into your budget, the payment on that money is too high to justify the expansion. But if the interest rates were 5%, well, now the rate is lower, the payment's lower, and now that might fit into the budget. So you might expand your business. It's going to allow businesses, if the economy slows down, rates will come down to support. And it's a balancing act. It's a constant back and forth to stay in the sweet spot.
Again, if you have questions, 484-352-4151, want to discuss mortgage lending options that you might have, feel free to get in touch with Bill over Cross Country Mortgage. Go ahead and I know this is a very basic question, Bill, and you probably explained this to me before on the show. So if you have, I apologize. But when we talk about just the Fed cutting rates in September, let's say it happens, and it's 50 basis points, is that immediately reflected in mortgage rates, or does it lag a little bit behind that?
Yeah, so this is a really good question, because what we see a lot of times is that if the market is highly confident that that's going to happen, they're actually going to build it in ahead of time. Okay, so with the degree of certainty that we feel we're going to see a 25 basis point reduction, by the time we get to that meeting, that's absolutely going to be built into the market. Then what the market's going to be listening for is, did we go to 50 basis points? And if at that meeting it's a 50 basis point cut, then we're probably going to see additional decreases on that day that the cut's made.
Okay, makes sense. So anybody that's looking or thinking about buying a home is kind of in the market right now, and again, kind of looking at rates and trying to figure out, okay, where are things going to go? And I know we talk about not trying to get into timing at all, but if somebody's considering it, there's no reason, I guess, then to wait, right? Because you can go ahead and start that process now, and then if the rates do drop a month from now, and you still haven't found that home, you're able to make adjustments, right?
Yeah, and so what I would say is a couple things. One is, if we lock in your rate and the rates come down by a specific margin, it has to be larger than the smallest margin lower, then we can actually renegotiate your rate to a lower rate before you get to closing. If that doesn't happen and you purchase and rates come down within the next 6 months, year, 2 years, we can refinance you into a lower rate. And right now we are trying to be sensitive to these concerns. So we're offering a no lender fee refinance. If you close with us on your purchase, when the rates come down, we're automatically going to reach out to you, let you know there's an opportunity, look at the numbers, and if you decide to move forward, there are no lender fees. So definitely trying to make it so that you don't feel like you have to time the market, because that's not a good position to be in. It's very difficult to time the market.
Yeah, that's great. Well, if you want to take advantage of that or just learn more about what's available to you, again, 484-352-4151. You can also log on smartmortgageshow.com, find all of our episodes there, plus additional videos you'll find about mortgage lending, refinancing, all kinds of different topics around home buying. Bill, anything else for this month? I know it's just the second day of the month as we're recording this, so a lot's already happened in August, but anything else on your radar?
So what's on my radar is just watching for additional economic indicators to be in line with the rate cuts, because of course, if data for some reason, if there's some extenuating circumstance, some unknown factor that enters and changes these numbers, then, when they say there's 100% certainty of a 25 basis point reduction in September, I feel like there's almost very few things in life that are guaranteed, right? So I'm still watching for more data to ensure that guarantee is met. So we're going to be watching, we're going to be paying attention, and we're going to make sure that we're making all the best decisions with any clients that we're working with and locking in.
All right, very good. Again, questions, 484-352-4151. Bill is the regional president at Cross Country Mortgage and is happy to sit down and discuss any questions you might have about current rates or just kind of see what your options are, or whatever questions you might have. We'd love to hear from you. So be sure to reach out. Also, please subscribe to the channel if you haven't done that yet as well. We appreciate the support. Some new subscribers joining in the last week. So thanks for being here. We appreciate that as well. All right, Bill, we'll get out of here on that note. A lot to kind of keep an eye on for September. Could be a busy last quarter of the year for sure.
We're hoping it's busy, and thanks so much for tuning in. We're always here to help.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.